Welcome back to the Real Estate 401k Show. I'm your host, Mike Weinstein, alongside Justin Frederick and Ryan Gerdes down at the end. This is a special edition because this is going to be specifically for our active military and our veterans, because we're going to dive into VA loans. You're going to want to text VA to 623-AZ-RECON. That's VA to 623-AZ-RECON, or just put VA in the comments section of wherever you're viewing this. So perfect time. Just a big shout out to Flash, one of our favorite dudes at Luke Air Force Base. A gift for the bar.
Dude, you're a stand-up guy, Flash.
Yeah.
I appreciate you,
Yeah,
buddy.
so this is personalized and branded for the 69th Fighter Squadron. So there's, I guess the slogan is "Wine 'em and dine 'em." I like go peck yourself, Angry
Yeah.
Peckers.
Yeah, peck. And he's also a phenomenal golfer, probably one of the best golfers I know. So we appreciate you,
I'm
man.
golfing with him Sunday, so you couldn't pull it off.
Wigwam?
Sorry, bud.
Yeah.
Cool.
All right, so wanted to, Justin, get into VA loans. There's a lot of myths out there about VA loans. It's even veterans, people who've got a VA certificate, don't necessarily understand. So I want to get into it, and I want to start with my favorite one. And I know a lot of veterans or a lot of people who are using VA loans don't know this, that they can qualify for up to $2 million on a VA loan.
So you can actually go higher than 2 million, but 2 million is the cap if you want to do 100% financing. And yeah, you wouldn't believe there's so many overlays in our industry on loan amounts for veterans. But we're a direct VA or VA direct lender. So that's actually the specific number that you can go up to at 100% financing. A lot of people are really surprised at that and think that they have to stick to the conforming loan limits, which is 806-500 currently. And that's absolutely incorrect. We can go well beyond that. There's just a slight difference in pricing once you hit over that 806-500 because it's considered a high balance loan.
Well, Flash is going to continue to peddle these bottles of bourbon, man. He might
Yeah.
be in the market for a $2 million
Yeah.
property.
I always, I obviously lean on you whenever this part of VA comes up. But when is it not a good time to use a VA? Let's say that they're purchasing a primary. In what circumstances would it not be beneficial to use a VA loan?
So here's right now, traditionally VA loans have much lower interest rates than conventional loans. However, there's been times in the market where conventional loans are pretty similar to a VA loan interest rate. And you got to keep in mind, if you have a funding fee and you're financing 100%, that's 3.3% of the loan amount. Now, if you don't have a down payment,
That's your only option.
right?
Yeah.
But right now, there's not many cases. If you're going to flip a property, and you have a funding fee, we want to avoid that funding fee because if it takes a while to recoup that cost. Even if your funding fee is only 1.5%.
Plus, the entire motivation behind the VA was for primaries, not for flipping.
100%. But there is, we have guys at Luke that are like, I'm going to live here for 1 year. I'm going to sell the place. They're looking to make some appreciation off the property, have somewhere to live, not rent. That's when we're like, okay, well, and most of our people out of Luke have incredible credit scores as well. So we're not too far off on the interest rate. We're saving money, not having that funding fee, and especially if they have a large down payment, then we're really looking at those other options. But right now, there's really not that much difference. Now, in 2020, when we were hitting rates in the twos and VAs were just running pretty much right in line, we were doing a lot more conventionals than VAs because of that funding fee. And because a lot of people had a lot of equity to transfer over to a new home. So we weren't worried about mortgage insurance. But typically it's the people that have a large down payment and still have a funding fee. Those are the people that we're looking at really what's the difference between conventional and VA.
So I'm going down my list, and one of the items that I had was a lot of people don't understand, especially newer people to the military, newer soldiers, officers, whatever the case is, but we kind of already covered it. Is a VA loan, you can get a mortgage without a down payment. Typically, FHA is 3.5%. Conventional is minimum of 5% in most cases. And so, to Ryan's point, is if you don't have a down payment, VA is a great option. So we covered that. But they also, one of the other myths out there that we hear is, you have a VA certificate, you have VA eligibility, and you use it. And there's this myth that they can only use it once. But if you are currently using it, it's tied to the property. But as long as you still have eligibility, you can keep using your VA over and over and over again.
Yeah, and so you can actually have two VA loans out at once, because you could use a certain portion of your eligibility. Yeah, there's a chance that the second home you're going to need to put down a down payment depending on what the purchase price is, and what you're borrowing. But in a lot of cases, we've seen it to where somebody has, let's just say they're in Virginia and they were based in Virginia. They bought a home there. They're going to rent that home out. They moved over to Luke and they're wanting to buy a home. Well, a lot of vets don't know that we can buy another home using that VA. And in a lot of cases, depending on what they borrowed in Virginia and what they're borrowing now, they can get away with 100% financing or close to 100% financing. There's actually a calculator for this that we use. We'll get the certificate of eligibility, and we'll price it out based on what they're looking at for homes, and set the expectation up front. Hey, you need $3,000 to close on that house or higher. So yeah, that's a big myth, and a lot of people think that if they had a foreclosure on a VA, that they completely lose all of their entitlement. It's not that way.
It's not good. But
it's not good,
true.
and it's not true. We still have, a lot of times we have some entitlement left, and that will help you get a long way with minimal down payment.
All right, and so then also I think the other myth is I think they, our men and women in the military, they're just different thinkers, and it's why we love them so much. And they're for the most part so disciplined. Whether it's the Army, Navy, Air Force, Marines, Coast Guard, that's just what boot camp instills in them. And I think they come out with this assumption that my credit has got to be absolutely perfect for a VA loan and even be considered for a VA loan.
The VA is the most forgiving when it comes to derogatory credit. Now, what they want to see is, housing expenses being paid. If you had a VA loan, they want to make sure that VA loan's being paid. But they are so forgiving on student loans, collection accounts, missed payments. We want to see, we want to know a reason for it. Typically, we're not going to get an automated underwriting approval if there's more than one missed payment in the past 12 months. But if we see a collection of missed payments, we can write a letter of explanation, and they will wrap them all together in one late payment. So they're not just turning them down for that. Now, if you have multiple months where you're missing multiple accounts, that's when they're like, okay, we see a trend here, there's a problem. But if let's say it's one account over 3 months, and we got a letter of explanation from the veteran that said, I didn't even know this account existed. We signed up for it. We got this.
How many times you and I have had that conversation when I'm getting to the closing table?
It happens a lot. It happens a lot. But we can tie that together, and we'll call it one mishap. And so they're very forgiving, and they give us a lot of leeway that helps us out to get loans done and to allow you to qualify for more of a home.
I want to jump back into the funding fee, because one of the things that people don't understand that typically if you're going to do 100% financing or you're going to do a VA loan, there's going to be a funding fee that gets tacked on to the back end. How does disability play into this? Because there's guys that are getting out. Sometimes
Yeah.
they're getting creative and they're getting some disability, but disability can eliminate or can minimize the
That
funding fee.
So there's another big myth right there. A lot of people, I don't know where they get these numbers from, but people think that you have to have 100% disability, or I hear 20% a lot or 50% a lot. No, the reality is if you have 10% or more disability, the funding fee, you're exempt from the funding fee, which if you have no funding fee, hands down, there's no other product for you. It's the best product by far. Mm-hmm. There's the fees. As a lender, we're giving you discounts already on the processing underwriting fee just for being a veteran. And then you don't have this funding fee. It makes things so much cheaper. It makes it really nice too, because you don't have a funding fee and we're doing a refinance, which we call an interest rate reduction refinance loan, or an ERL. You can do that every 210 days and just keep those rates going down. Now, hopefully we don't have to do that, but you can with very minimal expenses.
We are talking VA loans. If you're a veteran or active military looking at making a move in real estate and would like to talk to an expert and strategize on how to build wealth in real estate, all you got to do is text the word VA to 623-AZ-RECON. That's VA to 623 AZ Recon, or just text VA in the comments section.
All right, I'm going to get into the weeds a little bit with you here because
Okay.
I got some questions.
Okay,
too.
if you're going to get into the weeds, we had one more on our list, and then it's a free for all for you,
Okay.
right?
Yeah,
okay.
All right.
All right.
I can see what's on his list. This is going to be a short one.
Mortgage insurance.
So actually, I got a great story on this.
And now for you, Ryan, I'm just going to throw this away,
Yeah, I like
and it's just going to be the Ryan show.
We actually had an agent that, retired from your guys' team. He was out there buying his own house. And he didn't know that with less than 20% down, that he wouldn't have mortgage insurance. And we were doing a podcast for the brokerage, and he heard us talking on the brokerage, and he was like, well, shit, I don't have to put down 20%. And he had no idea. And he's been in the business for a long time, and a veteran, bought in multiple homes on the VA. And I just wonder, how many transactions he's used his VA and put 20% down.
Or how many houses he's passed up on because he didn't have 20%.
Or maybe he could have bought more houses so he could build his portfolio. But anyways, there is no mortgage insurance at all on a VA loan. Whether you're putting 100%, you're doing 100% financing, or you're doing 10% financing. There's no mortgage insurance. You never have to worry about it. And that's one of the main reasons why VAs are so much cheaper.
All right.
Let's go in the weeds.
Good stuff. All right. One myth. You cannot use a VA loan for an investment property, period.
Period. It's built for primary residence. You cannot fund a VA loan that's attached to that goes to an investment property.
Let me remind you,
Oh, boy.
if it's a multifamily property, right? Go into that.
They just have to live in one of the units. And now I feel like that's one of the most missed opportunities out there for any veteran, especially our young veterans out there that are just, they're trying to establish life at this point, majority of them. And I feel like every veteran should be, or every active military should be trying to get themselves into multi-housing because eventually, one, the interest rate's much lower than the market rate, and they can rent out those other 2-3 units. We can go up to 4 units on those.
And rent them to your other military
Rent
buddies.
them to your other
right?
military
Jeez.
buddies.
So that was a myth that
Have the BAH pay for it.
That was a myth that I believed up until about 15 years ago. So I had one of our veterans. He said, "Hey, look, I want to get into multifamily," and I was like, "Well, then we're not going to be able to use the VA." And then I got schooled.
Yeah.
And I was like, "Well, actually, we can. You just need to occupy one of them."
Yep.
So here's kind of I'm going down the rabbit hole.
Let's go.
So they've moved into the fourplex.
Okay.
They lived there for a couple of years. They've satisfied their VA requirements to establish it as a primary. they move on to something big. You know, they're growing their family. You know,
Yeah.
the wife and the kids no longer want to live with 3 other families. You know, door to door, right? So they move out and they rent out their 4th unit, perfectly within VA guidelines. They still have VA on it. What if they want to get an IRRRL?
So that's a good question. We can actually still pull that off. It's frowned upon. They should be
We're
occupying
okay with
it.
frowned upon. We just,
Well,
we just don't want to be told
you
no.
better explain what an EARL is.
Interest rate reduction refinance loan, and it's basically a refinance with no appraisal. And I mean, we can do it without credit report too. Now, this is something that we haven't done. I haven't done that. Probably 10 years. Probably 10 years. Probably 10 years. So I would really have to dig into that more. But I mean, I closed one for a gentleman that had a home in Alabama and had a primary out here, VA as well. So I'd have to dig into that and get back to you guys on that one. Thanks for stumping me a little bit on that.
Well, this whole fourplex concept, guy moves in, rents it out to his other military buddies, is what we should have done as parents. Bought a fourplex or a threeplex, a unit for each kid, and you and your wife in one unit. That's
there you go.
living,
Right.
man.
Yeah.
And you know, if you're right out of boot camp, flight school, whatever, you know, whatever branch military that you're in, I mean, you get that eligibility. I mean, you're usually a single male or female, and
Usually.
I mean, you don't really need for much, and particularly early on in the career, most of the time you're out and about doing military stuff. So why not do something like that? Start building your portfolio right out the gates. Then before you know it, you know, you get, you know, your first deployment, or you get, you know, orders to move or whatever, and all of a sudden you've already have some really good roots set down in your financial status.
I agree. And before last year, to get a conventional loan on a 4-unit was 25% down, even as a primary home. I mean, FHA is there at 3.5, but there's a lot of stipulations to it. Whereas the VA and conventional don't have those or FHA stipulations. But man, I just, like I said, I feel like that's a missed opportunity in a lot of cases for a lot of people, because 100% financing.
Right. And so
No mortgage interest.
you're a property owner, and then after a couple of years, because you have 3 doors / 3 leases, now all of a sudden you're a seasoned investor.
Correct.
And you have access to what?
DSCR.
Bam.
You got all kinds of options at that point. But the VA loan itself is going to make that ROI so much higher than any other loan product out there. It's such a big difference when you're talking high dollar amounts that you typically see with a good 4-unit property.
There's some good VA strategy for you
Yeah.
there.
All right, my last question, I wanted to wrap it up with this. When you're comparing debt to income ratios and the qualifying process, we've already established that you don't have to have perfect credit to get a VA loan.
Yeah.
But sometimes, you know, they leave boot camp, they get the first check, next
Yeah.
thing you know, they got a big giant truck, it's a $700 a month payment,
Yeah.
and so forth. Is the debt to income ratios for qualifying for a VA loan a little bit more lenient than conventional and FHA, or
This
around
is
the
a
same?
great question. I'm so happy you asked this question, because it's very lenient. We actually go off a residual income based on family size for the VA. And I've seen debt to income ratios approved for up to 68%. And you know, a lot of you might be thinking, oh, that's too high. But you got to keep in mind with military income, there's a lot of it that's non-taxable. So, you know, with a typical W-2 employee, you're seeing a massive amount of money going out towards taxes. You don't see that with the VA, because you have a base income, you have the BAH, you got the BAS, you got all kinds of different pays, flight pays, all kinds of stuff that's non-taxable that can really help them afford even at that 68%. Now, since we're on this subject, with departing leases, the VA is the best on departing leases. So you're departing from one home and you're moving into another home. You're going to be leasing out home number 1 to somebody else. Now, typically with a conventional loan or even FHA, we got to get an appraisal on that house to find out what the fair market rent is. We got to get a lease agreement, and we got to go through all that noise to make sure a certain amount is used. With the VA, we can actually get a letter from a realtor that's outside of our transaction that states this is what the market value is for this home, and we can use that number.
Bottle of bourbon, I'll give you that
We just
all
can't-
day long.
Yeah, right.
That's another business model.
Not that
man.
one, but you know,
La, la, la,
a
la.
bottle.
But I mean, we can't use income to start off with, but we can eliminate that liability.
All righty, everything and all things VA. If you're a veteran, active military, looking at acquiring real estate and have questions about VA loans, and more importantly, how to strategize VA loans and eligibility to not only just live in a home, but build wealth. All you got to do is text VA to 623-AZ-RECON. That's VA to 623-AZ-RECON, or just type VA in the comments section.